If you have Airbnb income, for example, as filed on your tax return, you can use that income for qualifying purposes. You have to document the income from these Airbnb properties. So there are portfolio rental lenders that are okay with that. You need a 12-month track record and they'll use that income. If they can't use that, let's say you only have 3 or 4 months, they can still do the loan, but they're going to do a rental survey.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And I'm your host, Bo Eckstein. And today we're going to talk about, can rental income that is generated from short-term rentals be used to qualify? We've been talking about this a lot in the past few episodes or shows and get a lot of calls. A lot of my friends and colleagues are doing Airbnb properties and corporate rentals. And, you know, the consideration always is, how do you finance these properties? How can you leverage? Traditionally, right? Like anything in life, it's all about how to get the best leverage. What are your options for financing these properties, etc. And so I really been doing a lot of portfolio rental loans. I've talked about them. And so if somebody wanted to buy a property to become an Airbnb, let's say, and they found a property and there's no tenant in the property and it fits the needs for their short-term rental, under our portfolio rental loan program, if we obviously we don't have a track record of Airbnb documented, so what we would look at is we'd say, okay, we're going to get a rental survey done, which is form 1007 or 1007. And that's basically a rental survey. And so the portfolio lenders will use a rental survey for whatever the long-term lease would be weighed at. So if the appraiser came back and said this lease, this would lease out for $2,000 a month, the lender would use that. Sometimes some of them have a little, they give a little bit of a haircut because it's not rented, but it gets you in the door to be able to use this loan to actually get in and then convert to an Airbnb, because they want to know that this property being rented out could debt service coverage ratio, debt service essentially a long-term lease. And so that's how they'll figure out the loan proceeds for these type of loans. So you can use portfolio rental loans for Airbnb properties. They're just going to go off of, if it's not occupied, they're going to go off of the rental survey. And that's how they're going to qualify. And these portfolio rental loans are not, they don't look at your tax returns. There's no DTI, but there's a DSCR, debt service coverage ratio. That's how they determine max proceeds on top of your credit score. Are the main characteristics. So that's what they're looking at when they're sizing up the loan and figuring out what the max loan they could do on this property. On portfolio programs, non-owner, you can get as high as 80% leverage, assuming the debt service coverage ratio is there and you have good credit.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free. Better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Now, if you were to, let's say, depart your primary residence and convert that to a rental property, Freddie Mac says that you need a form 1007. You also need a signed lease agreement, and you have the paper trail of the security deposit. So that's called like a departing property. So you see that a lot too, where somebody got a primary residence and they want to turn that to a rental, use that income to help them qualify for a new primary residence. And then we're talking, that's more like residential moving. But what I really do is more of the portfolio rental loan programs and commercial finance. But these all play together because you can use conventional sometimes, you can use portfolio rentals. I have a lot of clients that will get 4 or 5 conventional loans in their name, and then we'll do one blanket loan or portfolio loan, refinance those into an LLC, get them off their personal credit report. Granted, they're going to be showing you're going to have another entity with income and expenses, as long as that doesn't jeopardize you from a DTI standpoint. You can then go back and get conventional financing. So there's all different ways of playing the game, I guess. The other thing is that Fannie Mae, from my understanding, and I have to dive into this a little bit deeper, but once you have a tax return with income, they'll let you use 12 months of income. So if you have Airbnb income, for example, and it's filed on your tax return, you can use that income for qualifying purposes to help you qualify for more loans in the future, which is good, right? So the real hurdle is the acquisition if you're trying to go conventional. So that's where the portfolio rental loans make a lot of sense. You can buy them in the name of your LLC or corporation or business. It'll go on your personal credit report. We don't need tax returns. It's based on debt service coverage and credit score. So it kind of simplifies the process. The rates aren't quite as good as conventional financing, but there's a lot less scrutiny of the deal. And conventional underwriting uses 75% of gross rents to qualify, right? So you're getting penalized off the bat on a conventional standpoint. So there's a lot of like caveats here, but I just want to do shows and episodes on this because I get a lot of calls and inquiries, and quite honestly, a lot of my clients are doing Airbnb and they're crushing it. Not all, but most of them are doing very well in different markets throughout the US, Florida, Arizona, California, all different parts throughout the nation. So Airbnb is here to stay. Financing them is a little bit more challenging, but these portfolio rental loans do work for Airbnb. Now, on a refinance for a portfolio rental loan, there's a lot of portfolio lenders that still do not allow for Airbnb. There are a handful that do, and I get them done all the time. And what they look for is 12 months of operating statements or income statements from VRBO and Airbnb. You have to document the income from these Airbnb properties. So there are portfolio rental lenders that are okay with that. You need a 12-month track record, and they'll use that income. If they can't use that, let's say you only have 3 or 4 months, they can still do the loan, but they're going to do a rental survey. And as long as the rental survey long-term lease amount qualifies in loan proceeds for what you're looking for, then it's fine. So there's ways around everything to play within the lines, and we can get them done. And that's why I'm providing this show for you, just to say, yes, we can do it. We just got to figure out the best way to do it. So anyways, hope you enjoyed. I will see you on the next episode of the Investor Financing Podcast. And I look forward to getting some comments and feedback from you, and have a great day.